Welcome back to Investing Talk podcast. Today, we're zeroing in on a company that's been generating quite a bit of buzz, actually, in the critical minerals sector, NioCorp Developments. Now, many of you have asked us to break down the key information and really help understand one crucial question. Is now a good time to buy this stock? So our mission for you today is to unpack the latest analysis, look at the potential, the upsides, and also the critical downsides. And we're drawing all this directly from the sources you've shared with us. We'll look at everything, from their financial backbone to market sentiment, the inherent risks, so you can walk away feeling well-informed, confident in your assessment. Before we jump in, just a quick note. If you find this kind of analysis helpful, please remember to subscribe, maybe like this discussion, and leave a comment. It really helps. You could also consider buying us a coffee if you appreciate what we do. And if there's a specific company you'd like us to look into next, just drop it in the comments below. We're always curious to know what's on your mind. Okay, let's unpack this then. First, at its core, what exactly is NioCorp Developments? We're talking about a company that's, engaged in developing rare earth and other critical mineral projects, primarily centered around its Elk Creek project. That's in Nebraska.
Right. And a key point to understand about NioCorp is their current stage of development. They haven't actually started commercial production yet.
Okay, so pre-revenue, basically.
Exactly. This immediately tells you that their revenue growth it's largely speculative at this point. It's built on future promise rather than present output.
Makes sense.
However, their positioning in the critical minerals sector is indeed promising. It's largely driven by the surging demand from industries like EVs, electric vehicles, and renewable energy. And the unique aspect here is the specific combination of minerals at their site. You've got niobium, scandium, and titanium, all critical for high-tech applications. That could give them a real strategic advantage, once production actually begins.
Okay, so since NioCorp is still in development, the usual profit and loss statements, they don't really tell the full story, do they?
Not at all.
For a company at this stage, it sounds like it's all about managing their burn rate and, crucially, securing capital. So what do the sources tell us about their financial backbone right now? What's the real story behind maybe profit margins, debt levels, cash flow trends?
Well, like you said, as a development stage company, they don't have significant current revenue or profits. So traditional metrics are just less useful here. And while debt levels and cash flow are absolutely crucial for companies at this stage, it's kind of like the fuel gauge on a long journey, right? Our sources, however, don't provide granular specific figures for these.
Wow. Okay.
And in absence, it's a significant piece of the puzzle for investors. It means there's an inherent uncertainty around their current capital needs and also potential future financing activities, which could involve, significant capital raises or maybe dilution if funding isn't secured promptly.
Right, that's a key risk factor then.
It is. And this brings us to future earnings. Recent guidance does indicate an expected EPS range of minus 0.350 to minus 0.350 for fiscal year 2025. That negative figure simply reflects the ongoing development costs without significant revenue generation yet. It's expected.
Okay. And in terms of valuation, the sources mention a negative PE ratio. What does that really signify for a company like NioCorp? For our listeners who are deep into investing, how should they interpret that?
Yeah, that negative PE. It isn't necessarily a red flag in this context. It's pretty typical for companies in this pre-revenue phase.
Okay.
It just means you're investing purely in future potential, not current profitability. So it makes traditional valuation less about current earnings and much more about anticipated milestones, projected future output, and importantly, market demand for the critical minerals they aim to produce.
So PS and PB are less relevant too.
Exactly. Price to sales, price to book, not much help without significant revenue. It also makes direct comparisons to industry averages really challenging because, frankly, very few companies are at this exact unique development stage with this specific mineral mix.
That's a crucial distinction for understanding a company like this. Let's turn now to what the market has actually been doing with this information, because NioCorp's stock has certainly shown, significant volatility.
That's absolutely right. The stock saw a recent surge up to $3.77, which suggests a wave of investor optimism, maybe tied to news or anticipation. In terms of technical indicators, the 50-day moving average is around $2.51. The 200-day is $2.22. Now, for those watching charts, these levels could act as sort of psychological support areas.
Okay.
And the 14-day RSI, it's currently around 50.6. That indicates a pretty neutral position right now.
Neutral,
Yeah.
even with the surge.
Well, yeah. For a stock as volatile as NioCorp, this means we're not seeing immediate signals for an overbought or oversold correction, which often leaves short-term traders, navigating continued choppy waters.
Right.
This high volatility, these significant price swings, they really underscore the higher risk profile for any short-term trading in NioCorp.
Okay, that makes sense. Beyond the raw numbers and the charts, what's the broader chatter around NioCorp developments? What's the recent news, the overall analyst sentiment shaping perceptions?
Well, recent stock price movements have definitely been tied somewhat to analyst updates, highlighting strong investor interest still. For instance, Maxim Group recently increased its price target from $4 up to $5.
Okay, positive move there.
Yeah, while interestingly, H.C. Wainwright adjusted its target slightly down from $4.25 to $4.
A bit of divergence.
A little bit. These shifts, while maybe seemingly minor, they do reflect ongoing reevaluation by the street. But overall, analysts generally have a strong buy rating on NioCorp developments.
Now, that strong buy rating, it does stand out, doesn't it? Especially given the lack of current revenue and the volatility we just discussed. For our listeners, is that rating maybe overly optimistic? Or are analysts seeing something very specific that justifies that confidence despite the pre-revenue status?
That's an excellent question.
Yeah.
And it really gets to the heart of investing in these development stage companies. Analysts are likely factoring in the projected long-term demand for critical minerals, definitely. Also, the strategic importance of the Elk Creek project's specific mineral mix and the potential for NioCorp to become a significant domestic supplier. That's a big factor.
Right, the domestic supply angle.
Exactly. So they're assigning value to the company's future potential and the successful execution of its development plan, rather than its current financials. It underscores that a strong buy here is really a vote of confidence in the future commercialization and profitability, not necessarily its current financial health.
Okay, understood. So for you, the investor listening, what are the key upcoming catalysts? Things that could really impact NioCorp's stock performance going forward?
There are a few significant ones to watch closely, I'd say. Upcoming earnings reports, even without revenue, could provide positive updates.
Updates on what specifically?
On project developments, maybe permitting progress, or crucial financing news. Those would be key. Also, any announcements regarding product launches, even initial small ones, or major project milestones.
Like securing offtake agreements.
Precisely. Or significant progress on construction. That would be highly impactful. And additionally, changes in regulatory policies affecting rare earths or critical minerals, particularly any policies incentivizing domestic production, could significantly influence the stock.
Lots to watch them.
Definitely. However, with high potential, as we know, often comes high risk, which raises the important question. What about those risks? No investment is without them, especially with development stage companies like NioCorp. We can sort of categorize these into a few buckets. First, you have stock-specific risks, like the company's inherent dependence on successful future project developments and, critically, obtaining all necessary regulatory approvals. That's huge. Then you have sector-specific risks. Things like intense competition in the critical mineral space, maybe potential technological shifts that change demand, or even unexpected declines in demand for niobium, scandium, or titanium specifically.
Okay.
And finally, broader macroeconomic risks. Global economic downturns, shifts in interest rates. These could affect investor willingness to fund or invest in development stage companies that require substantial capital.
Right. The funding environment is key.
Absolutely.
So let's bring it all together. What does this all mean for the big question? Is NioCorp Developments a good time to buy now? Our sources provide a rating of 6 out of 10. Can you break down why that specific rating and what it really means for our listener considering this company?
Yeah, that 6 out of 10 rating for NioCorp. It truly reflects its dual nature, I think. It presents both significant opportunities and notable risks. It's definitely a high-potential, high-risk play.
Okay.
The strength lies in its strategic positioning in that critical mineral sector and the unique mineral composition of its project, which aligns well with long-term global demand trends.
Right, the EV and renewables demand.
Exactly. But the challenges, and what brings that rating down from, say, an 8 or 9, are primarily the lack of current revenue.
Oh.
The dependence on successful project execution and substantial future capital, and, of course, the high volatility we've observed. It's fundamentally a bet on future success.
So very speculative still.
Highly speculative, yes.
Yeah.
Now, based on our sources, the suggested best entry price range seems to be between about $2 and $3. This range considers the recent volatility, while aiming for, a sweet spot that offers potential for significant growth if the company effectively executes its development plans.
So who is the stock best suited for them?
Well, it's clearly better suited for long-term investors, those who have a higher tolerance for the risks associated with development stage companies. Patience is key here.
And short-term traders.
Short-term traders should definitely exercise caution, mainly due to that inherent volatility. It could swing wildly. For those considering trading, maybe a stop loss below $1.50 and perhaps a take-profit target above $4.50 could be considered. But these should always be aligned with your individual risk tolerance and your specific investment goals. That's paramount.
Absolutely crucial advice. Okay, we've covered a lot of ground on NioCorp developments today. Really tried to balance the exciting potential with the inherent risks of a company still very much in its development phase.
What's fascinating here, I think, is how understanding a company's life cycle, from initial exploration and development all the way to eventual commercial production, it fundamentally shifts how you evaluate its current value and its future prospects. It's not just about what they're doing, but when they're doing it in their growth journey, and how that timing impacts every single metric you analyze.
That's a great point. So for you, the listener, the ultimate takeaway really is to align your investment strategy with your personal risk tolerance and your time horizon, especially when looking at companies like NioCorp developments. You need to consider how much you value that future potential against present-day stability, and remember that even in really promising sectors, patience and careful analysis are absolutely paramount. Thank you so much for joining us for this look into NioCorp developments. We really hope this has given you the clarity you need